All right, Alpha fam, let's do a quick market update. Before we begin, I do want to say that nothing in this video is financial advice. Everything is for educational purposes only. This is just my own analysis on the market. Also, if you're new to this channel, if you can please like, comment, and subscribe. We really do appreciate all of the support. Now, let's get into this, guys. This has been a crazy market, guys. So, like, we had a complete 100% 360 reversal from what we just went through the other day. So we went through basically the 10-year bond in Japan skyrocketed past the levels of 2008. It's scaring a lot of investors because they thought that maybe the Bank of Japan is going to raise interest rates and the Japan carry trade would continue to unwind. But that is actually not a decision that's made until later on in the month. So since we started seeing the bonds rise, this was the reasoning behind this sudden drop. I think, honestly, price makes narrative. I think that they used that narrative to press price down to liquidate longs because they knew what was going to happen the following day. So what happened? This. Vanguard lifted its ban on the ETFs for crypto. All right. Vanguard is one of the largest VC institutions that there are, and literally after they did it, there was over $1 billion in trading volume within 30 minutes. Bitcoin literally pumped 6% at the daily open yesterday. It was crazy. And this was all because of the IBIT volume that came in through Vanguard. And it wasn't just Bitcoin. It was, Ethereum, Solana, and XRP had massive inflows yesterday, guys. And what's essentially happening is this. The market is preparing, obviously, for rate cuts. All right, so we know we're getting rate cuts. We can see right here on Fed decision for Polymarket, we know we're at a 95% chance of rate cuts. Jerome Powell just also kind of reiterated it the other night. And then looking from this from a technical perspective, guys, things look really good. So this is the hourly. It looks like Bitcoin's attempting to make a bull flag right here. We also have data that comes out today, which is the ISM Services PMI data that comes out at 10 o'clock. I'll be watching that closely. A general explanation of PMI is if it's above 50, the economy is expanding, but it's expanding. And then if it's under 50, it's contracting. It's just a general rule of thumb. Looking at this, and it's showing that they're forecasting a small drop, maybe because of the government shutdown. Not 100% certain, but I'm going to be watching this. But we also had unemployment came a little bit higher today. Unemployment claims went up a little bit, I believe. And matter of fact, this is what I do every day, guys, just to kind of give you an idea of how I look at these markets. One thing I do every day is I go to forexfactory.com, and this is going to give me a general idea of the macro data that's going to be released, and then it gives me explanations if I have like a little bit of confusion with it. Of course, I've been doing this for so long, but this is how when I first got into macroeconomics, this was one of the websites that I used to be able to track this stuff. So we can see right here, guys, look, we had non-farm payrolls today. The actual was minus 32,000. Previous was 47. The forecast was 5. The actual was minus 32,000. So that's a big jump. And these are the things that we need. So, like, I'll give you guys an idea of like a small crash course on how the Fed works for cutting interest rates. Unemployment needs to be rising, and inflation has to be as close to their 2% goal as possible. Recently, they've been a lot more flexible with that 2% goal than where they used to be, and now they have decided that they're not going to just, if it's not right at 2%, they're not going to cut interest rates. They're not going to do that. They've basically made it flexible. So independent website you can look to track inflation data, guys, is trueflation.com. And then what you can do is you can come up here to the indexes and just look at the United States. And the reason why you want to check this independently, guys, is because it gives you a general read on what's going on with the market. So, like, obviously, if this thing is like going up very aggressively to the upside, then you know that, there's an issue. Like if this thing's like well above 3%, but the fact that it's basically hovered between this 3 and 2% inflation target has been very doable for the Feds to be able to cut rates, as long as there continues to be an issue with the labor market, which there has been. With that being said, where do I think we're going? Well, obviously, we've completely made up this whole move yesterday. You can even see it a little bit more in the hourly. We've broken well above the 50-day on the 4-hour. what we need to do is we've actually made a higher high. I've said this for a few days now. I want to see us clear this $94,000 level. You can see how it's been kind of acting as resistance so far. Of course, we're still a little early for the daily open for the U.S. market. General rule of thumb, what is the U.S. futures market doing? It's usually going to give us an indication on what the TradFi market is going to do when they open. And we're moving up, guys. You can see this is on the 5 minute. You can see we've just been moving up. This also, even on the 5 minute, for like a small, kind of look like it's trying to create a bull flag right here. You know, it has this little pendant right here. See how this goes. You know, we still got plenty of the day left. This is futures for the S&P 500. It looks good too. Again, guys, I told you when they broke back above the 50-day, this was over a week ago. You can go look at those videos. I said if this thing can break above it and use it as support, I will feel a lot more comfortable that this move was just a correction and not like all of a sudden we're going into a bear market. Guys, quantitative tightening stopped yesterday. Yesterday was the first day of quantitative tightening fully being finished. It obviously doesn't mean the next day that they just start printing money, but it's obviously moving in the right direction. This is a very important thing in order for us to start an easing schedule. We're lining up for the perfect storm next year, guys. Just think about this. We got Trump getting ready for midterms, replacing Jerome Powell. They just talked about his replacement yesterday, which is a guy that actually used to be an advisor for Coinbase. It's kind of crazy. He's going to be the next SEC guy, or he's going to be the next Federal Reserve chairman. We've already got Gary Gensler out of the SEC. We have, we've got a crypto-friendly SEC now. We are gearing up for next year to be really explosive for crypto for a few different reasons. Jerome Powell gets replaced, Trump puts his guy in there, continues to lower interest rates, and then continues to start an easing schedule. They've already bailed out the repo market. They did it was a massive amount of liquidity that they just sent over to the repo market, so that crisis is now kind of concluded. With that also being said, we also have $2,000 stimulus checks that I think are going to hit around the same time that Jerome Powell's replacement comes in, which is going to be around tax time, guys. I can see us gearing up for mid 2026 of just racing, because all of that liquidity is going to be in the markets and it's going to find its way into crypto. It's the number one e-liquid market in the world. It's a liquidity sponge. It's just what it is. So with that being said, I also like to look at the Bitcoin versus Ethereum chart, because this gives me a general rule of thumb what is going on with the performance of Ethereum versus Bitcoin. And this thing looks like it's getting ready to break out of this descending wedge pattern it's been making for months now, which looks really good. We always want Ethereum to outperform Bitcoin, because the general rule is Bitcoin runs, Ethereum goes second, then large cap L1s, and then from there we go alt season with the lower caps, like medium, lower, and then kind of just the rotation of capital goes its way down. Ethereum looks pretty strong right here, guys. You can see it's basically had this trend line that it's been respecting, and it's also making this descending wedge pattern. But look at this. It's broken out of its trend line. So now what we need to see is, obviously it's well above it on its 50. It's making a bullish. This is a continuation pattern. This looks really good. SUI, guys, has been one of the biggest explosions that has happened. It's moved almost 20 some odd % in the last couple of days. It's been a big mover. So what it's showing me is the appetite for risk and L1s, large cap L1s. And that's what I've been saying, guys. I said I think what will happen is Ethereum will run, and then the large cap L1s like Solana, SUI, Aptos, all of those major L1s will start to catch a bid in their ecosystems, and then probably a narrative will run with it. So example, stablecoin protocols, SUI, and something else will all kind of run together. Just like we just had privacy coins and the perp dexes kind of run together. I think right now what we'll start seeing is L1s, and obviously stablecoin protocols are one of my most bullish narratives. I'm also extremely bullish on RWA. I am bullish on some AI projects. I'm also extremely bullish on anything that supports the TradFi narrative. I'm extremely bullish on it. Anything that supports that, because that's where the money is going to flow, guys. So with that being said, I think things look really good. Obviously, I don't think we're out of the woodworks yet, because we are still some levels I want to see us cross above. But as far as the momentum, looks pretty good. We also don't want to get faked out. A lot of people get extremely bullish. They don't take profits because they think this is going to be alt season. This could just be still a relief rally. We could experience potentially another leg down before that happens. We have to understand, guys, we're looking at 3 to 6 months in the future here for a lot of this stuff that we're talking about to actually come. Jerome Powell doesn't get replaced until May. Stimmy checks probably ain't going to come out till mid next year, after taxes, so these things are going to take some time. You also have a lot of market structure that's happening too. But obviously, TradFi is buying as much as they can. It's evident. You can see it on chain, guys. Yesterday, they did $5.1 billion of inflows. It was massive. So with that being said, guys, keep your notifications on. Again, if you're new to this channel, please like, comment, and subscribe. And again, guys, if you're trying to learn this type of stuff, if you want to understand this type of stuff at a deep level, macro, economics, fundamentals, technical analysis, and you also want to be in a network of extremely high-performing entrepreneurs that are banding together to really outperform the markets and in life, click the link below, guys. We'll see you inside.